And so we don't have the awkward pause that we had on Friday. I'll go ahead and welcome everyone out. It is May 28th, 2019. We have myself, Coach Noah, and Coach Gino here to start the week off. Even though it's a short week, we're starting on Tuesday. So we're going to mix our Monday and our Tuesday. We're going to talk about overall markets, and then we're going to do some Delta setups for Delta Tuesday. So we got a lot to get to. I'm going to pass it off to Noah.
Well, here we go. Fantastic. We'll start out with the S&P, Gino, as we're taking a look at this here.
Mm-hmm.
Pretty quiet day thus far for a Tuesday after the holiday. I think everybody's recovering from some very hard barbecuing and Memorial Daying. Pretty quiet inside candle. We were talking about if we could come up with a new name for two inside candles like a harami. We decided to go with the twins, so we got twins inside there. Pretty quiet, across the board with the S&P. You take that down. Let's take a look at the NASDAQ, and a little bit more activity on the NASDAQ, but inside candles, harami style candles, very low base on that. It's kind of looking like a potential breakdown there. What's your read on that, Gino?
Yeah, kind of boring. I thought we'd have a little more volatility coming into a 3-day weekend. You usually get a volume surge on Tuesday from all the over week, then 3-day staleness there and all the European markets moving and making a decision and coming in Tuesday. But I'm not seeing the volume there. Indecision. What are we waiting for? We need a catalyst. We need a catalyst here. We're waiting for something. There was no tweets. There was no big news. And I think we have a little sector rotation going on here. And I was looking at the sectors here. I'm just waiting for a sector to say, pick me. I'm going to be bullish. Right now, I see a little bit of real estate, but looking at the markets here, I don't have a strong buy signal. I'll tell you that on anything. I have more bearish positions than I do bullish, and I don't see a sector standing out. But other than that, I'm not going to go bullish until I see a clear signal.
Absolutely right. Let's switch gears and take a look at the Dow. And Dow is interesting, I think, coming up here off of this 200 period moving average, with a slightly higher low than before, but still inside consolidation. Falling 20 period moving average. It's down below the 9 period moving average, well below the 50. But, that 200, period moving average there, obviously a big catalyst. And this is the one index that I think might have a bit of a chance there if we do see some bullish activity, and not too shabby there. Do you have any different input on that there, Gino?
No, that 200-day you're looking at there, that is support. Yes. And we got some small, again, rising candles inside of a big candle. What that is usually what that is. If it doesn't get above that big candle there, if it doesn't get above the high, that is usually just short covering.
Yep.
Or we call a bounce. Some people call it a dead cat bounce, what have you. So, I needed to get above that big sell-off candle before I even think about any bullish position. But I moved that 200-day hold.
Yeah, I moved it down here into a 1-hour chart.
Mm-hmm.
And just thought I'd point out something here that it's kind of in that kiss goodbye zone. So if you look at it from this perspective, you can see that inside consolidation is rally up. And there's some support resistance neighborhoods here at that 25,700 ballpark. And you see it forming a triple top right there. And if we are seeing a breakdown intraday where it starts to take out the low, daily low, candle low, that's got a bit more of a bearish feel to it from the intraday time frame. I can see the higher low. We can see the lower high. So at this point in time, it's still inside consolidation. But I did want to point out that potential kiss goodbye setup in there. And then let's switch gears and look at the Russell 2.
Oh, the rut. Yeah, I was looking at the rut.
Good old rut. Here on the daily chart of the rut, I think the rut looks the most bearish of all the.
Yeah, for sure.
What do you attribute that to, Gino? Is it just the
I'm not
mid cap struggling, or is it more of a rotation? Is money being moved out of certain areas?
I'm not sure yet. I'd have to break down the inner industries of the Russell, but it is bearish, of course. Yeah, of all the indexes. But I'm looking at it, and it's not that much more bearish. Like if you do that double bottom there, it's got the same pattern as the other markets.
Yeah, double bottom there. It is below all those moving averages. It's down below the, the 9, the 20, the 50, the 200. And that can be a very strong bearish, indication there. And then something we ought to take a look at, Gino, that I know that you like to look at is the AR, what is it? AR high.
Yeah, AR high 3M minus AR low 3M.
AR low 3M.
Yeah, highs versus lows. We actually got green today. And that's just one day.
When you're looking at it, Gino, what are your numbers here? I know in the past I've heard you say you wait for at least 2 candles, and I like to see it get out above the 100 mark on that indicator to actually show me some real strength. What's your interpretation on that?
Yeah, so I use a lot of different indicators, Noah. And when you get a market like this, you can sit and wait for your clear buy signal, your clear sell signal. But meanwhile, you go into the intraday charts and what we call internals. Internals of the market kind of give you an inside look of where the money's shifting. And this is one of my favorite for the overall market. Then you have internals like sectors, like which sector is leading. A lot of times there's always a lead sector you could be playing. Like right now, real estate's on the lead. There's some sectors that are down that you can play, like the metals. And there's always a clear bull and bear there. But for the overall market conditions, some of the internals you can look at or other markets that are affecting it. What I like to look at is there's different indicators like McClellan oscillator, advanced decliners, put call ratio, the VIX. There's little indicators you can look at, and I kind of glance at a handful of them. This one I developed. It's an indicator that I kind of perfected what was called the McClellan oscillator. And McClellan is one of those great
technical names,
Yeah, he's one of those guys like Wilder, Bollinger, that had their own mathematic indicators. And I had to go and perfect it. I had to show them how to do their math. But anyway, what I did is they like to look at on a McClellan oscillator advanced versus decliners, and that's more of a what I call a little bit too fast of an indicator, because whatever's
more of a day trader type indicator.
Yeah.
Right?
Yeah. Because advancers today could be decliners tomorrow. Right. In fact, there's some advancers today that are up a nickel. They could be down a nickel and be called a decliner in about 5 minutes. So that's, again, like you said, it's too fast of an indicator. It's better for a day trader, but there's overbought and oversold signals on that.
Let's take a minute and explain this AR high 3
months.
Well,
how does this differ?
I did put the symbol in the chat for everybody who wants to be able to use this.
It only works on TOS though.
Yeah, it only works on TOS. And this is it's basically measuring the archipelago clearing network, right, Gino?
Yeah, so what I did is I don't want the advanced decliners in New York Stock Exchange. What I want is the highs and lows. Who's making a new high and who's making a new low of the biggest exchange, which is Archipelago, all digital, over 8,000 stocks traded. Now, why highs versus lows versus advanced versus decliners? Because as a master trader yourself and a master technician, you guys are, a lot of people don't know this, but if a stock is making a new high today, it's definitely, no argument, in a bullish trend. If it's making a new low, it's definitely no argument in a bearish trend, because if it's making a new high, it's bullish. Could it be overbought? Yeah, but it's still in a bullish trend. So what I'm looking at this is when I say highs versus lows, I'm only looking at 3 months of data, not 52 weeks, 3 months, because that means it's definitely trending. If you looked too short, like 1 month or 2 weeks, it could just be not out of a major channel. It could be just channeling. So 3 months is definitely, it's out of a channel. It's trending. It's making a new high. It's bullish, or it's making a new low. It's bearish. So bottom line though, when I look at this, is I read it as this: 3 month bulls versus 3 month bear trends. And who's trending harder right now? The bulls. But it's only plus 43.
Which means there's 43 more stocks making new highs than there are lows, right?
Right, which isn't that strong. That could actually change intraday. And based on McClellan, I have to give him credit on it. He said his indicator was weak when it was below positive 50 or above negative 50. He ignored it. So I ignore this unless it's above 50. And like you said, Noah, my go signals, I need 2 closes, solid closes above positive 50 to be bullish. 2 solid closes below -50 to be bearish. And also, Noah, I don't take it seriously until it gets above 100. And that's when you buy on the dips. When it's green and it's above 100, I buy on the dips. And there's a lot more sectors making new highs. And there's definitely the bulls are in control. Now, when do we get our sell signal real quick, Noah? Was it May 9th on that? We had 2 reds.
The 2 reds down there. It was the 8th and 9th right there. Yep. The 9th is when it really got below 50.
And I was bearish then, so that was my bearish signal. Go back and look at the S&P and see how we did. And that's why I was bearish. There you go.
Right on there. It was a pullback, and then it turned a lot more bearish right in there. So,
and real quickly, Noah, I was bullish. My bull signal came. Actually, if you go back to the AR high low, it came. I went bullish back on January, was it 17th? Yeah, January 17th, roughly, right about there. Yeah, there you go. That's my bull signal, January 17th. What did the market do? Because it was bearish all before that, right? You can see all the red.
You can see it was very, very rough. Yeah.
So that's the last 2 signals I got. So let's test that one real quick. We'll go back to SP and look at that. There, January 17th. Where is it at?
So January 17th is after that nice.
That'd been a good time to go bullish.
Yeah.
Coming out of a downtrend. And so there you go. That's a market internal. It fires off. I like it when it trends. Bottom line here, a lot of people don't know this. Most traders do. Trending indicators only work good, though, when things are trending. So trending indicators for trending, overbought, oversold indicators for sideways. So moving averages don't work when things aren't trending either. So again, when everything's trending, yeah, this is a great indicator. When things are just sideways and going, nowhere, not such a good indicator. You got to use different things. But yeah, this one's done me good as long as the market's trending.
Well, it's a very unique indicator, and what I like most about it is the breadth of it, like you say, the market and the market breadth indicator.
Yeah,
8,000 stocks off of the Archipelago clearing network. I mean that's a pretty good metric to measure.
Mm-hmm.
And this has been something since you showed it to me. I've been using it, and I've found it to be very, very useful. And it's just one of those things. I check on a weekly basis, make sure I understand where we're at. And, usually it's you're taking your cues from what you're seeing on the chart of the S&P and whatnot.
Yeah. So yeah, internals, pick your favorite. Don't pick too many. I had a couple I liked, so I combined them and made this one. So until I get one more, I need a good green above 50. And like you said, Noah, just because it's a buy signal doesn't mean it's a strong buy signal. I like strong buy signals. I want to make sure that I don't jump the gun. I'll be a little bit late to the party, but a little more accurate. So again, this is a trader's market, meaning pick the right sector, which probably brings us to our next segment, right?
Well, yeah, before we go do that, let's check out some of our other major market indices and things. Let's check out the dollar. Let's check out $D.
Oh yeah, the dollar's been
dollar index. And I did the Forex report this week, and I was thinking a little bit about this last week in the scouting or in the coaches show, in the halftime reports, and in the lounges. I ran into the same question every time. Managing that day trader rule, if you have 25K or less in your account. And that happened to me early on in my trading, Gino. I got frozen on a regulation T violation, and had my account frozen for 90 days. And I called them up and says, "Oh, it was just a mistake," and they let it go. And then I did it again, and they flagged it, and they froze my account for 90 days a second time. But then they wouldn't let that hold off. So I was trying to figure out how to trade with the limited amount of capital, and that's when I really got attracted to Forex. And if you're new to Forex, you got to go check out this week's Forex report, because again, I've put together 2 recent Forex reports and I've referenced them together. That's just a good place for beginners to get started. And I know that, Cody, you trade a lot of Forex, right?
Absolutely. And yes, I was happy with this pop right here on the dollar.
So dollar showing some signs of strength. Give me a technical read on that, Gino.
You're muted, Gino.
Okay, you want my read or Cody's?
Well, I'll take Gino's technical read, and then I want to hear how Cody's trading.
Okay, so I was really interested in how it's going to perform today, because you see how it did. Last candle right there.
Yep,
that was testing support, and it turned around real quickly here. So if we have a follow through, one day is not a trend, but if this follows through, this is a trigger low here. This is a trigger swing low. And if this follows through tomorrow, I see the dollar going back up and testing that double top there. That could be detrimental. That could be a bigger break there and sending it off to the 100 level. But that held. I didn't know. I thought, me personally, I thought that would come down and test that other moving average you have there.
That 50-period moving average. Yep.
I thought it would come down to there because that's a nice channel. Mm-hmm. And this time it found a little strength here. And I want to see how it finishes off today. And again, this is just day one, right? So it's at the high right now. And this is the halftime report. Let's see how it finishes the day. I actually think, Noah, not the top of those candles, but I'm interested to see if it breaks just a little bit lower than that. Where are you at? A little bit lower. Where's the body? Keep going down right there. I see a lot of resistance there.
Yeah.
Yeah. So I might want to throw alert on there because what that's doing is that's having a huge effect on not just the markets, but the metals, which we'll get into.
Right. It's going to affect all, because I mean, think about this. It does affect the markets. It affects everything, but it really affects commodities.
I know. And I was looking for an entry in metals and I was hoping that the dollar would sell off today. I was hoping, but I have to go with the chart. And so I dabble and I start to pick bottoms on the metals, especially silver and gold. But this is not good for agriculture, commodities. It's usually just the opposite. It makes it go down. So if we have another follow through tomorrow and this starts hitting a new high again, that's going to be real interesting to see how it affects not only the metals, but different sectors in the market. That's going to be real interesting.
Yep. And to help the newbies understand, this index that we're looking at here is the dollar index compared to the, 5 or 6 other major currency pairs. So it's in correlation to that. You've been trading a little bit of currencies in it, Cody, and I know that you keep your eyes on those charts regularly. Did you see anything actionable this week that was of interest?
So actionable was, so I was waiting. And so on the DXY, it's actually missing one day because even though our markets were closed yesterday for Memorial Day, the global markets were not. So right. If you look at the US dollar, there's actually 2 candles in there. And so the actionable item was actually this morning when it triggered below yesterday's low.
So yeah, I just switched to the euro US dollar, and that's a pretty clear signal yesterday. And then today, definitely a confirmation candle down on that. My favorite currency pairs over the weekend were like the Australian dollar and the New Zealand dollar. I thought that they were showing such tremendous signs of weakness. I've been waiting for this little setup here. I've been waiting for a good bear retracement setup, and we got the candle shrinking and slowing down there. Needs a confirmation signal. But between the Australian and the New Zealand dollar, they had a ton of downward momentum, rally back up in between the moving averages, just kind of a textbook bear retracement. And a lot of negative economic news coming out of Australia. I know they're having some major concerns with economic slowdown, housing slowdown, things of that nature. And they're talking about doing some rate cuts, which would certainly bode weak for their currency. So, preemptive rate cuts. I think that's the territory we're in right now.
Preemptive rate cuts. So I'm not preemptively short them.
Preemptively short them. Any other currency pairs that you've been interested in?
So I've been watching the British pound mainly because of the no Brexit going through, and of course with Theresa May now stepping down. That one definitely sparks my interest because where's currency going to go based on what leader they get next? So since she stepped down, they formed a third party, the Brexit party, and that party within a week gained more members and more seats than the other 2. So they actually now have a majority, 29 seats, I believe, in Parliament. That this party now wants a hard Brexit. So definitely got my eye on the British pound because of, it's just been getting extremely beat up technically. And now with the news surrounding it, where they're not sure, which way they're going to go as a nation, whether or not they're going to allow the EU still to have regulations on them, what the trade is going to look like, what the border situation is going to look like. So yeah, I got my eye on this one because I still think they got some room to the downside.
Oh, absolutely. It's been interesting, and it was very interesting to watch Theresa May step down there. Very heartfelt, exit speech. But yeah, I love the chart. I love the technicals. So again, if you're new to currencies, go check out this week's Forex report. and check out previous week's Forex reports and just kind of get your bearings. The nice thing about trading currencies is it doesn't matter how much money you have. There is no day trading rule. There's no, limit to how frequent you can trade, and you can position size with mini lots and micro lots and standard lots. You can really control your leverage, and currencies will give you more leverage than any other part of the market. But you can customize that leverage better than you can with instruments like futures that have a lot of leverage and things of that nature. So check it out.
It's so easy to learn. It's
not. If you know how to read a chart, you can trade currencies. The only trick is learning the position sizing and learning how the pips, like the minimum fluctuation.
Yeah, exactly. The leverage in it makes it more desirable, but it also makes it a little bit more dangerous.
Well, it's only dangerous if you're irresponsible with the leverage, right?
Yeah.
Because you can trade mini lots all day, every day.
Because we never get greedy.
You never struggle with greed and human emotions like that.
It actually, Noah, you can actually, if you know how to read a chart, you know how to place a trade, you can figure it out in paper money on most of these brokers, where to put your stop, how much the risk is. After 3 or 4 trades, you know how to trade it. So
it's not rocket science. Anybody who's been through technical analysis courses and knows how to read a trend, knows what support and resistance are, can figure out multiple time frame analysis.
And it really, once you put your stop loss in there, like a lot of times I'll just put my stop loss $15 away on a mini lot, which is like you only need $250 in your account at 50 to 1. But it basically, you buy 10,000 units, it holds up $250. That's the minimum. $15 takes a long time.
2.5% margin. I want to stop and just hold on that idea for a minute. 2.5% margin. That's typically less margin requirement than you have in any other instrument, right?
Oh, definitely, by far.
Hands down.
But here's the thing. It's only risky if you don't have a stop loss.
Right. It's the most liquid. You don't have to worry about gaps. You don't have to worry about because it's so liquid. You're guaranteed to get filled. And Marie in the chat points out something that's really important. No commissions if you have the right broker.
No commission.
The cost of your trade is just the bid-ask spread.
Exactly. Yeah, the spread itself is what you play. And actually, pull back up the euro dollar and put it on the hourly chart. Because you were talking about you were saying, have I seen any actionable items? Well, you throw a 200 moving average on there, that's an actionable item.
Yeah,
it's just the 200 hourly.
Well, when you focus on the 200 hourly, you might miss the head and shoulders.
So that's the euro going down for people that don't know. That's the euro going down, meaning the US dollar is going up.
Exactly. So I'm long the dollar, short the euro. Now, the positions that I have on it, I'm prepared to exit pretty quickly because they have EU elections going on right now where they're putting each country's going to be voting in their new members. So that can have effects on it. But as far as technically, no, like you said, head and shoulders there, reversal. We just looked at the daily chart on it. This looks really good to the downside, and the dollar's been increasing in strength. So really like this euro dollar trade right now.
One other selling point on currencies. You only have 6 major currency pairs to focus on. Whoops, I didn't mean to scribble on that, but 6 major currency pairs. There's cross pairs and things you can trade, but you can narrow your focus to just those 6 major cross pairs.
What a watch list.
It's a huge watch list. And you compare that. You don't even have to scan.
Honestly, you only need to trade 2 or 3 of them though.
Right. Yeah. I'm not that nobody cares about Canadian dollar right now. Come on. That's not moving.
Nobody trades Canada.
So you can take that off the list.
I'm pretty sure our Canadian students right now are like, hey, come on, guys.
Yeah, no, it's just pretty quiet if you look at it. It actually has got a nice little uptrend going on it if you look at it.
Just because you live there doesn't mean you have to trade it.
I just changed my mind. The Canadian dollar is all the rage today. It broke to a new high.
Oh, I'm moving there now.
Oh, that's 15-minute chart. Hold on. I got all excited.
There we go.
Whew. Back to good old steady Canada. No surprises out of Canada ever. So you got a nice little consolidation there. When it breaks, I'm interested in buying. So
and also you got to be careful with the pound right
now. Joel, we love our Canadian students. We're just pulling out legs.
You're always joking with them. We got
what you do with your kid brother. You got to razz your kid brother, don't you? So
well, we got Greg Holmes up there. He should be on this conversation.
he can handle it. He can handle it. All right, let's switch gears and look at precious metals now. So we got our conversation there on currencies. Here's a gold chart. I know you've been watching the metals carefully, Gino. Do you have a technical read for us here?
Well, like I said, I was starting to pick bottoms on gold. And as an investor, I like to pick bottoms and kind of cost average on commodities, on things that don't go bankrupt as a long-term hold. You know, I pick up a little bit here and there, especially silver. We'll get into that one. But with the dollar doing a swing low, look at the opposite. We got a swing high in the metals. You know, so that's a big thing. Where the dollar had a double top, you can see here, gold has a double bottom. So if the dollar breaks that double top, this is what I was referring to here, you might see gold break down. I don't know where the next level is. You can probably zoom out and see. But if it breaks that 12, what is that, 60, 70?
70 ballpark.
Yeah, there's a little bit of a drop there.
Well, it kind of gets to that moving average, that 200 period moving average in the 1250 ballpark, the 1260. That'll coincide if it does indeed break support.
So I'm not bullish on gold, just so you know. I'm not bullish on it. I'm just saying it. I'm looking for the trend to start losing momentum. And I thought that might have been when I saw the dollar breaking down last candle. But got to focus on the dollar. So if you're trading metals is a currency. It's a commodity and a currency in most countries. So you have to treat it both with, you know, looking at the euro dollar and a couple of the other big ones that we were just showing you. So there is a lot of fluctuation here, and it is an economic indicator, but it's not going to trade like oil versus dollar. It's going to usually go the opposite, you know, most of the time. So I don't know. No, I see here. What kind of pattern is that? When you break it out to a weekly, there's more of a, is that a pennant?
Kind of, well, if you break it to a weekly time frame, let me back it out to a weekly time frame.
Yeah, because it's a little bit interesting here on a weekly. Check that out.
Kind of a big pennant pattern. That's kind of what I had drawn there. Just a big pullback.
Looks like one of those Chinese dragons, you know? So
I don't even know what that looks like, but yeah, I can see that. I could draw that in there.
I can see the dragon there. I like it. A dragon pattern.
Yeah, I see it. All right.
Is that bullish or bearish? No, it's dragon.
I see it. Hold on. It's like, here's the dragon. Here's where the flame comes out. And here's the head.
Yes. There you go.
I got it. You can see
it. That works.
Yeah. So I don't know, which way does that usually move, the dragon pattern, right?
Well, it moves erratically and it burns down villages. So,
well,
I was going to say it sits there somberly on its gold.
Yes.
Yeah, there you
go. There's an archetypal story for you. The dragon guarding the gold. That's it.
So that's a major support there. And once it breaks that support and closes below it, it's going to be hard to get it back above it, which means reverse process, think backwards on it. That means the dollar's breaking out and hitting new highs, most likely. And when is that going to end? So I don't know, that a lot of, like you said, news in the pound right now. I'm staying away from the pound as a currency trader, especially with surprise news when Theresa May stepping down, stuff like that, the Brexit, you know. So I'm sticking to the euro dollar and watching that as my indicator for this.
Now, you got a little excited this morning, Gina, when we were talking about silver.
Yeah.
Yeah. So this is a pretty good technical setup. As you see, the kind of a textbook bear retracement with that support zone in there, the breakdown to the new low, the rally.
Major move.
Yep.
I think that's our biggest mover today.
Yeah. Look at the volume on that. I mean, that daily volume on silver. So
and all the sectors and all the products I'm looking at, that's the biggest move down, 1.6% just today. So as an investor, if you're holding metal, you don't like it going down. But as a long-term investor, I don't plan on cashing in. I'll go and buy the physical. I start buying the physical, you know, when it gets down to these prices. There's room for it to go down lower. There's room for it to go lower.
Absolutely.
If it gets down to $14 and puts in a bottom, I'm going down to the local store and picking up a couple coins.
Yep.
Yeah. And if I'm doing covered calls on this one, if I'm doing like SLV covered calls, I'm doing them slightly in the money. So when I'm looking at SLV right now at 1363-ish, I'd be selling the 1350 call slightly in the money to protect my downside. And that gives you 53 cents of downside protection.
Okay, hold on. We need to stop right there. That was a pro tip. If you guys didn't catch that, Gino just gave a pro trader tip that it's one of my favorite techniques, is if you're doing the covered call strategy and it turns into that bearish bias, you should be writing those in the money.
Yeah, in the money.
To protect the asset. In the money covered calls, the intrinsic value of the option is enough to cover the asset down to the strike price. Extrinsic value is the premium that reduces your cost base. And it's a defensive posture but it keeps you relatively neutral because those in the money options have a high delta. And if you own the stock position, if you're selling an in the money option right now, and what did you mention? The 13.
Yeah, I was going to say, pull that up on the trade tab because that really is a good tip. So explain the intrinsic, extrinsic while they can see it on the.
Yeah, well, let me switch gears just to the SLV. It'll be.
Yeah, so when you trade the paper asset, you got to do the ETF.
Yep. So if you were to look at 30-day options in that ballpark, and you go in the money, and you'd mentioned selling the in the money option.
Well, are you on real time right now?
Yep, this is real time.
Okay, good. So 1343. Right at the money there is the 1350. It's only 20 cents and gives you 20 cents protection, right?
Yep. And it's got a delta.
That's okay. So if you want to protect your downside, you want to be right at the money or at the 13. And I might even let it drop a little bit more.
Well, look at the 13. It's got a delta of 78. So if you had a negative 78 on 100 shares of stock, your new net delta is just 22. So it really reduces your bullishness. It gives you a nice little premium. And then this is kind of the general idea behind that. Let me go show the intrinsic value. Intrinsic versus extrinsic value. There's, 1343, $13. There's 43 cents of intrinsic value. And the extrinsic value is not a lot. It's just 9 cents. But it's that intrinsic value that covers the asset to the strike price.
Right.
And the nice thing about it is if it comes down to that 13, you can then roll the option down. You can roll it down and out. And you can always create more intrinsic value protection for your asset. So that's a really awesome pro tip.
And so it's called a protected covered right. And you know what? It's also a technique I use when there's a dividend payer and I want to protect the downside. Because, you don't want to buy a put that's, spending money just to get a dividend and you just kind of wash. But I would rather sell a call in the money to protect the downside and still get the dividend. Yep. So it's a good dividend protective covered put, protected covered right is a good dividend play for stock short term. But yeah, it's a little bit of protection to the downside, not a lot. Again, it's only giving like 50 cents downside, right? But it gets very advanced from there, Noah. It gets very advanced. Like I hardly ever buy just 100 shares unless there's some major reason I just want 100 shares. So if I'm buying, let's say 1,000 shares, I might sell 5 calls.
Right.
5 calls, but they're actually even deeper in the money. I'm selling it and getting $1 each on those. And that's the same as getting 10 calls at 50 cents. Yeah. But what happens there is I plan on 5 of them being taken away and 5 of them going up.
So Gino just answered one of the questions coming.
I was just about to say, yeah.
Won't it be exercised? Well, statistically speaking, you're not going to be exercised until expiration Friday.
Yeah.
Early assignment happens occasionally, but I don't know, Gino. I think it's probably 90% of the time options don't.
Only time I've been exercised ahead of earnings was on Tesla, and it spiked so rapidly up that it went from being like a 3 delta up to like a 9 delta or something crazy like that. And at that point,
deep in the money.
Exactly. It went deep in the money. And the owner of that call is like, well, heck yeah, I'm going to exercise this because there was so much value in it so quickly. It bouncing around that, in the money, out of the money area, just, around 0.5, 0.6, like that's not going to get exercised until expiration.
Right. Yeah. So no, if you go back to SLV, I'll show you that little advanced thing that I do here that you do a lot too, is when I do the protected covered right, I want to protect my downside, but I do want some upside, right?
Yeah.
So if you look at the options there, check this out. What happens is I want the downside, and I'm 38 days out. So I want the downside. You can sell the 13 and that only gives you 50 cents protection, right? And it gives you about $11 or $12 extrinsic value. Whoop-de-doo. Not bad, but it protects the downside by 50 cents. What I like to do is if I buy 200 shares to make it easy, I'll sell one call at $12.50. And guess what that gives me? $1 protection. And since you have 200 shares, it really gives you 50 cents each. So you're getting 50 cents each, but they can only take away 100 shares. You still have 100 that could go up.
Yep. Partial covered call. And then I put stop losses on them.
Yeah. But nice thing is I could get a discount on both of my my round even 100 shares. They both have 50-cent coverage. I'm selling one for $1 and unlimited upside. So if it takes off. So that's how you want a covered call. I don't like covered calls being capped. I like unlimited upside.
So, and then to answer some of the questions coming in the chat, when you sell options, it's not up to you. You get exercised on.
Yeah.
When you buy options, you have a right to exercise, and you call your broker and say, I want to exercise those. So that's probably the easiest way to do that. All right, let's switch gears and let's check out crude light. Get a good look at the chart of oil here. And I've shifted my bias on oil to bearish with all this technical mayhem breaking down below the 200 period moving average. Putting in a bit of a bear retracement here. I
wanted to be bearish because I paid $5.10 a gallon yesterday.
You might have a hope is a good strategy, I suppose. No, it's a terrible strategy. But you see that price coming down, and seasonally, I don't expect oil to be bullish after June, July. Like June's the last drop for oil. Then it's really seasonally very bearish until December.
So why is this up today with the dollar up?
I think this is just buying a cover. That's all I think that is heavy sell off, a little bit of buying. Volume's got a bit of an uptick. And I think there's going to be inventory issues. I think there's a lot of inventory out there.
Right. So, and remember, we just came off a news event where we had tensions with Iran. It started running up, then they turned that off and then it dropped.
That's the outlier there, and uncertainty there. So not too shabby. So crude light, always of interest. And I think that takes care of all of our major market indices. Anything else we need to see? I think we're good there. Let's switch gears and talk a little bit about our scouting reports and talk about how we've ranked these sectors. Gino or Cody, do one of you guys have our sector ranking handy for this week?
They are in the prep notes.
Yeah, in the prep notes. Let me go grab them up.
Yeah, I got the sector rating right here.
All right. So there we go. Let's see if we can pop that out there.
There.
I'll actually just grab the scouting report and bring it up over here. I'd also like to go through some of the scouting report picks this week because we've got some killer candidates out there.
And by the way, consumer confidence better than expected.
Was it now? I'm feeling confident, but I'm confident most days. So if they were to pull me as a consumer,
such a lagging indicator, though.
I'm so confident, but
it really is a lagging indicator. I think that's the only reason it's orange via Forex Factory.
Yeah.
But I have seen that thing when it misses big, it will move the market.
Yeah, that's true.
All right. So let's see here. We got the reports popping up. And we'll go with Tackle Newsletter. And you put the newsletter together this week, right, Cody?
I'm sorry, I turned away. What were we talking about?
You put the newsletter together this week.
Yes, right? I'm back in the newsletter. I know people are upset. They loved Marquise. but I did do the newsletter again this last week.
There were riots in the street, I assure you. No. So there we go. So we got a little trade, a little bit of recap. What I want to get into here are the
Joel, I don't know what that means. What's a liter? I'm kidding.
A liter? You mean a gallon? What are you talking about?
Yeah, you get
a gallon. Nothing like the metric system to make Americans look. We don't have to change, even though the scientific community changed a long time ago. We're going to stick.
We're not going to use the easy system that simply moves the 0 over 1. No, we have to memorize like how many gallons or how many quarts are in a gallon and how many cups are in a
It works. So sector rankings here. You notice we actually moved quite a bit of stuff down. As far as our sector rankings. So we have the S&P relatively neutral. I think we're spot on that read. And then to the bear side, we got basic materials, energy, industrials, and healthcare. We're neutral on technology and cyclicals. And then we're still bullish on the dollar. We've got a slightly bullish bias on communications, financials, staples, real estate, and utilities. So as we go through that ranking, and by the way, if you're not using that scouting report newsletter every week, I think it's really, really helpful. This is one of my other favorite things right here is this little seasonality index here. And let me zoom on it so you can see that. And you kind of figure out here we are at the end of May. And this is traditionally what the market does this time of year based off of what we got 20 years of data in here. So you look at what you expect for June, and that's, you know, where we say summer is for theta. That's what that means.
Mm-hmm.
That sideways oscillation. You know, there'll still be swinging and picking in there. Of course, we're always going to be doing some directional swing trading and stock.
Yeah.
But for overall market conditions, my expectation for the summer months is basically chop. So time decay is probably the place to go. And for me, I'm always doing things like bull put credit spreads, bear call credit spreads, naked puts, occasional naked calls. I know you did a pretty awesome deal on that. Was that last week's coach's show where you did the cash flow club where you did the naked call?
Yeah, we did the naked call last week and then the naked put the week before. Then we started putting them together doing the naked strangle. And, you know, that's more for
What are you doing this Thursday, Gino?
I think we're doing long call on the coach's show. And then this Thursday, I'm not sure exactly. Maybe we'll go into credit spreads, or I'm not sure. We'll post it.
Yep.
Awesome. Looking forward to it.
What's today? Is today long call?
Today is long calls on the coach's show. So
Long call. Okay.
Mm-hmm.
God, today just still feels like Monday to me.
So debit
I'm thinking like, oh, tomorrow? You mean tomorrow on the show? No, tonight on the show.
Yeah, tonight. Well, you're in Hawaii, so you're the last person on the clock. You know.
That's right.
So it might still be Monday there. I don't know.
So let's run through those charts real quick, and then after that, I think we'll switch gears and go set up a delta trade on one of our scouting reports.
Nice.
So financials, you know, we maintain positiveness and some slight bullishness on this because of the double bottom on the 200 period moving average. It needs upward confirmation, but for now, it's above the 200 period moving average. If it can break back up above that 50 and see it cross back up above those falling nines, and then eventually, by the time it breaks that, you know, resistance peak, you'll be out there violating that 20. So possible double bottom on the financial sector. Basic materials is on the flip side. You see that breaking down below the 200 and down below all the moving averages. And this is kind of a textbook head and shoulders in here, where you see that, you know, left shoulder head, right shoulder, potential breakdown there. So I definitely see some more bearishness out of materials. Industrials, right off that 200 period moving average, kind of neutral until we see some upward movement. A break below the 200 is a big deal, I think, for the industrials. That would send us quite bearish. Technology, still a ways up from that 200 period moving average, and it's got a slowing momentum pattern, but it's still a minor downtrend. So you back that out to a weekly chart, and it feels like a big old bullish retracement. And I think the big question is are people going to be buying the dip on the tech stocks? And, you know, thus far, boy, that XLK stock looks just about like Apple's chart. If you really, you know, factor that in, it's about the same as Apple. Energy sector, all bearish. It's gone below all the moving averages, got some downward momentum after the gap down last week and a little inside consolidation here. I'm maintaining my bearish bias on energy. Consumer staples have been one of the strongest parts of the market, and you're seeing a little bit of selling pressure today. Question is, will you think they'll be buying the dip on the bottom of that channel? You got consumer confidence up, candle down. I think that's going to present a buy opportunity for traders. Then we got cyclicals, a little bit deeper pullback, slowing momentum into a known support resistance zone well above the 200 period moving average, but still minor pivot downtrend below the 20, below the 50. This is almost, I don't know what you call that when you're 20 and you're 50 cross. I don't know that that's technically a death cross.
Death cross.
It's more of a
Cross, right?
mortally, not death, but maybe just a little stinky cross. It's definitely a bearish signal when you see those two moving averages.
Wait, not quite death.
I'm not quite dead yet, cross.
Or are we comatose?
Perhaps. I feel like going for a walk. It's all good. So looking pretty good there. Healthcare is one I'm a little bit more bearish on, even though it's had some upward rally in here. The backside of that 200 period moving average.
Yeah. Hold right there. Healthcare. This one is where you got to look at the internals real quickly. Just look at pharmaceuticals, PPH, and IBB. Because this will give you an idea where healthcare is going. Look at that. There's health. There you go. There's pharmaceuticals, which is healthcare. That's a big trigger down. And so IBB and BBH are the biotechs. So if the biotechs do a swing high and trigger down tomorrow, healthcare is going to break.
Yeah, and I've kept that, and I was kind of looking at the actual index itself here, just from this big technical downtrend.
Oh yeah. So I'm my prediction is that the odds are, and especially all those moving averages right there, a nice trigger below today's candle would be good to buy puts on this, or bear call or something bearish. But I have a feeling healthcare might trigger to the downside the next couple of days here.
Yep. And then we got our utility sector doing a little pullback after posting a new high.
Yeah.
Yep. So we're waiting for, I think, a retest, probably another day or two down before you see it testing that support. So I think there's some opportunity there. And that to me is one of those signs of sector rotation. As you see money moving into, utility type stocks, it's coming out of other areas.
Yeah.
Yep. Kind of that flight to safety. Utility stocks are not big movers. And, the idea is, hey, if the economy slows down, people might stop some of the discretionary spending, but they're still going to pay their utilities.
Right.
Real estate also showing a little bit of bullishness.
Hey, real quick, before we move past healthcare, Jonathan, there's a lawsuit against Johnson & Johnson and a couple other healthcare providers on whether or not they should have to take responsibility for the opioid crisis, not because the argument is with the doctors prescribing it, but the pharmaceutical companies are the ones that are pushing it through ads and various things of that sort. So there's a lawsuit out there. Not sure where it's going to go, but that does have an effect. But that would be more of a black swan if it goes badly. I think it's just baked into the chart right now, so I wouldn't worry too much about it.
I got the mostly dead, slightly alive. Not to 50. That's what that makes me think of. Okay, there you go. And then the XLC, the communication sector, it's down below the minor moving averages, across down below the 50, but it's got a slightly higher low. This is kind of an inside consolidation.
Right.
And I don't know if it's going to be bullish or bearish until I see it break up or down. So we'll keep an eye on that. This kind of cracks me up every time you see a new instrument when the moving averages just start showing up. It's like, okay, oh, hey, there's the 200 period moving average. Nice for you to show up for us. There you go. That's a pretty good sector read. All right. So now based off of that information, let's switch gears and go crack open. Let's go with the options report. What do you say there?
I would say the option report is got some good setups that haven't triggered yet, but are right there about to, or do you want one that's triggering right now?
No, we've got so many to look at. Let me get over to the report.
Bullish or bear?
Yes.
Both. Okay.
I'll go. Well, hey, you tell me which way the market's going. So.
Oh boy.
All right.
Well, one that just triggered is ICE. Well, I'll wait till you get there.
ICE, baby.
And I like to swing low on Match Group. Don't like Pepsi. I found out that people aren't drinking Pepsi as much anymore. They're going to the mineral waters, the Honest Teas.
All right. So let me zoom in on that.
Shop triggers. List. We got a lot of great triggers there. No, why don't you just hammer through them and let everybody decide which one they want to trade.
Okay. So on AFLAC, we got a high base, kind of a bull flag type pattern, looking for a breakout.
Oh, speaking of AFLAC, we were in Chinatown yesterday eating duck.
Where you know? My 2.5-year-old has started paying attention to what's on TV. So far, his favorite commercials are the AFLAC duck.
Wait, is that a duck or a goose on AFLAC?
Of Jake from State Farm. And, so there you go. Brand recognition. AXP, this one is an interesting pick. This is shout out to Noah Peachy, who sat in on our scouting report.
Right.
He was, one of the winners of our rapid fire in the coaches show, and then and the grand prize there is you get to come in and hang out with us as we get together and do the scouting report meeting on Fridays. And I warn them in advance, it requires a disclaimer, and it's a PG-13 audience for sure. So they get forewarned, but we had him throw that pick in. We liked it, and it made the report this week. So there you go. Nice looking. It hasn't triggered quite yet. I'd be waiting for the breakout. Charter's a nice little pullback. This one looks like it could have triggered today. If you need a little upward movement, you can reestablish your entry and stops. DRI, Darden Restaurants, reestablishing a little bit of bearishness here. I think we need to, that's one of the reasons we always wait for confirmation. Needs a little upward movement there. ICE triggers. So ICE triggers. Now, when you see a trigger like that, Gino, I still think there's plenty of room left in the trade. I think there's an opportunity to still get in there.
Yeah. That's a breakout. I was hoping it'd be at the high of the day. It's pulled back a little bit. So what do you do now if you're not triggered yet in it and you still like this trade? Would you put the trigger above today's candle or wait for an intraday trigger?
I'd go intraday. So this one I think is really a good example of a lesson intraday, where you can see it's poked its head up above resistance.
And let me guess, 15-minute?
Yeah, and I go down to about a 15-minute time frame, and I want to see an entry here. So now on the 15-minute time frame, I'm seeing a bull flag.
Yeah.
So I'd be willing to trigger, above the bull flag. I'd be a buyer out here. If it comes deeper, I'd be watching for the retest down here at 82, and then take an entry down here. So if you miss the initial, break, you can always take it intraday and look for another trigger. And
what if you did catch the break, like a lot of our members? Do you take profit?
Yes, it depends on my plan.
Yeah, it depends on how much profit. Can you bring your stop loss to break even?
Like retest and then a run up, then I'll bring the stop up to break even. Once the intraday chart gives me a support zone, I can move the stop loss up underneath. That's what I look for, is that for that intraday support zone to come in before I move stops. But again, depends. Like, one of the first things I used to do is I learned a day trade a breakout, and I just take for the 1 ATR pop. And that's 1 ATR pop about, you look at that break and you take the money and run. So as a day trader, I'd take the money and run. As a swing trader, I'm just going to adjust my stops up.
Yeah.
Maybe scale out of the position, take some money off the table once I've made a nice little profit objective there. So ICE looks good. MDLZ, little bit of a breakdown there, not triggering. Match group. Ooh, that's pretty.
Yeah, I like that. I like that swing low. And see, this is one, Noah, where if you missed it, you still put it above today. Now, this one I'd put above the wick of the candle.
Oh, yeah. I would probably reestablish an entry above the candle high and maybe put the stop below the candle low or the pivot low on that. But that's a good looking confirmation candle. And there's plenty of room left in that swing range. Usually if I have a pay range expectation of, say, 8 days, 8 candle swing, I'm not going to say you can't enter it until you've seen like 2 or 3 days up. Once you got 2 or 3 days, then you're starting to eat into your trading range. But just 1 day trigger, I think there's still opportunity here for sure. Pepsi Group, kind of a pullback down. Be watching for a retest. So we were hoping for a high base break. Watch for a retest here. Procter and Gamble, this, like the rest of the consumer staples, has come down a bit. Watch for a retest. This one may come down to the bottom of the channel. You might see it come down here, and then there's still a buy opportunity.
Yeah, is that in the wrong sector to be going bullish?
No, I think, if you look at the staples, it's been one of the strongest sectors, and it's coming down the channel. So if I see the sector start to form support, then I have no problem with it. Shop and Team, these are tech, and Shop triggering above the high base, and Team also poking its head up above. This is one where it played a little bit of whack-a-mole. It poked its head up and it's come back down. So this is when I might switch intraday to look for a trigger.
Now, real quickly, Noah, is anybody out there on YouTube Live there? Anybody wondering where you can get this list if you don't have it? Would anybody like this list that doesn't have it?
Well, by all means.
This is a pro member list, guys. So, this is for pro access only. This is our pro member list, and they have access to this every week.
So, I was going to say, we got a little sneak peek this week.
Yeah. So this is not just, this is our option list. We have bulls and bears, as you see. We also have a stock, bulls and bears, commodities, bulls and bears, and of course, Forex.
Yeah.
So just so you know,
we got the whole bear list there. Not too shabby looking. Come over and join us. If you're not already a pro member, come over and join us. And by the way, that'd be a good time for everybody to give us a like and a share. That would be absolutely fantastic.
And for those who want the link to get that list, it's right below us. First link in the description. Click it, get your pro membership, you'll get the list.
I love that bird dog list. Tell you what, even though I get to put in the time on the scouting report meetings, that list it's a godsend. It's like having trades gift wrapped it for you, and it's like every weekend is Christmas.
And right now it's 15 days free.
Yeah, there you go. So check that out. I actually, out of all those setups, I think
which one?
Ilk is right. Match group, I think it's got a pretty good look there. So if you're going to plan a delta trade, this is a conversation that I like to have, Gino. A lot of folks you could trade that with stock, of course. That's simple.
Always
Easy.
can do the stock.
Buy the stock, put a stop loss in down below the support zone, maybe figure out the targets. The scouting report, of course, gives you those ideas. We give you kind of the bare minimum for stop losses and target ideas. If you're going to trade with this with options, Gino, a lot of traders learn the rules for buying options, and they're traditionally taught kind of a conservative method of buying in the money options with a high delta of 60 or more.
Right.
Now, I know you and I, Gino, are a little bit more aggressive as traders sometimes.
Oh, yeah.
And we'll buy the out of money options.
If you're right on your picks and put more time into the charting, put a little extra time in the charting, get better at your picks, meaning you're batting like a 65, 70% or higher. The actual option that has the best return on your money, meaning the percent wise, like what the cost of the option is, which one will double faster for you?
Hold on. Before you drop this, Gino, I just want everybody to increase their focus right now because this is another pro level tip.
Yeah.
Gino's about to drop some knowledge on you. So get your pens ready and write this down. Okay, now go.
So if you have better than a 50% batting average, meaning you're good at your stock picks and you put more time into swing trading, you're going to find that the deltas of 30 will pay you and give you better return than the deltas of 60. It's about percentage on your money, not about how much money. Yeah, delta of 60 will make you $60 on a 1-point move, and a delta of 30 will only make you 30. But that 30 delta will be way less cheaper, like more than half the price difference of the 60 delta. So you can buy 2 30 deltas for cheaper than you could buy 160. Okay.
Let's see if that holds true. Now, for amount of time here on Match, we don't have weeklies. If you're buying options, you're either.
And also, the 30 delta is going to grow faster than the 60.
Yes, you get the gamma scalp on that.
Mm-hmm.
So let's see.
When you're right, you want out of the money options.
Let's see if this is a good match.
When you're right, that's also the key. So started off by saying
most often,
if you have a better batting average than 50%. If you don't know your batting average yet, stick to the 60. Let's be safe out there, guys.
And now the 60, the reason we like 60 is it's better. It's easier to hedge the 60. It's easier to
It's the safer play for the newer traders. Is what it is. It's a much safer play. So until you know your batting average, stick to the 60. Stay safer.
So there you go. You're right on, Gino. 72 delta, 780, 245 on the ask here, delta 36. And the big difference here is the gamma. That the gamma is higher on. That's kind of the big issue. So yeah, that's an idea for you. And then if this is kind of one of those things where, hey, if your risk tolerance, you could do something real simple here, like one single option contract at 240. That you may not even need to use a stop loss on it if your risk threshold there. You of course can always trade with the stop losses on that. And then another real quick rule I think that's very helpful for people before we go out is if you're trying to figure out what kind of risks involved, take the ATR on the daily time frame, ATR times your delta. Now that's a triangle for the delta. ATR times delta will give you a rough approximation of risk because you can use a stop loss greater than 1 ATR. And that's a really simple method to give you some risk measurement. There you go. So we are up against the clock.
Mm-hmm.
We get pulled off a successful halftime report here at tackletrading.com. It was fun, as always. Tonight we got the coaches show. Same time, same station. I'm going to be there. Coach Grant's going to be there. We're going to be talking long calls. I think we may take another stab at planning and placing some delta trades with some options, long calls, kind of explaining the rules and getting into some of the nitty-gritty details.
And I was also told that, if I did not pitch the step system or get you guys to pitch the step system, then I would be left high and dry on the streets. So got to tell you guys, the step system that the coaches have been working on is probably going to be one of the greatest systems we're putting out there. From that, I'll pass it to Noah, who's actually put work into building the system.
Well, we've been working on it nonstop. And I got to tell you, it's a powerful system. It helps people. It's going to help people round out their technical analysis. It's going to help people round out their delta trading, help them figure out where to put it into their portfolio. It's a complete system that'll help you whether you're a day trader, a swing trader, a position trader. We've geared the system to help you plan, place, prep trades, and the step system. We're going to be hosting a webinar coming up next week, which we'll be sending out all kinds of invites for and announcements, which you'll be seeing coming up. But we want y'all to register and come out for that, because we'll be showcasing what the step system is and letting you guys see what it is. It's pretty awesome. I mean, I got to say, I'm quite proud of what we put together there.
And when's that going to be?
Really excited to share it with you. On the 5th, we're releasing it. And between now and then, there's going to be emails and announcements and invites, and we'll get you guys all registered. And we'll talk about all the fun stuff there. So it's going to be a good time. I'm super excited about it because, again, countless of hours of work have gone into this. And it's, I think, ideal whether you're a beginning trader, intermediate, or advanced, doesn't necessarily matter. So we will see you guys there. See you tonight at the Coaches Show. And we'll catch you guys tomorrow in the halftime report.